Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So it is 11 GMT now, today 20th of October, Thursday. ECB is expected to announce the interest rate, and most likely there is not going to be a change in the interest rate decision. But afterwards, by 12:30 GMT, the ECB press conference is expected to happen, during which the ECB president is expected to give the question answers after giving a brief explanation about the government stand. So the players are expected to make some volatile moves for that of the fundamental data release, and how exactly the trades are to be envisaged. So this webinar is pertaining to this. Spike trade calls, pre and post ECB data and press conference. The spike trade call refers to that of a quick profit booking trade. So in a matter of about 30 minutes or 1 hour, we should be in a position to earn a nice profit depending upon the momentum in the market. So the pre-ECB data release, now we are at 11 GMT. I'll take about 30 minutes to explain to you what is expected to happen before and after that of the ECB rate decision release and also the press conference. I'll give the trade calls at the end. Then afterwards, I'll come back by 13 GMT. I'll take about 30 minutes to do the review of the forecast, what I have given, and review of the results of the trade calls given will be done. So it is actually a live experimentation before you in order to explain to you how reliable my trading system is. Now my trading system consists of 3 components, namely the forecast, which is a gross derived forecast based on specific statistical algorithm. Then we do the market reading using specific market reading technique. It's a very simple market reading technique using the live market code page. Then afterwards the trading technique I'll explain to you. Now, first of all, the forecast. So on Mondays, I give the Asian session live market analysis webinar. During that time, I explain to you the expected market moves for all the 3 sessions of the day. And I just copied from there. And during that of the Japanese session, they were expected to make the swing and rise. Then afterwards, swing and slide is expected to happen during major part of the European session and then rise. So most likely, during that of the ECB press conference around 12:30 to 13 GMT, they are expected to make an upward move in the case of Euro and GBP and slide in the case of USDN. That is what envisaged based on the forecast model. Then during the US session, they are expected to make the swing and rise, and tomorrow also they are expected to continue the rise. So the trend is expected to be upward after this ECB press conference. So in line with that of the larger trend and the expectations, we can do the buy near that of the low and keep the hedge order to limit the risk, and then we can just wait for the spike to happen and maximize the profit. Now for that we need to do the market reading. So here is the slide which shows the initial lows and the highs noted down today by 3:30 GMT during that of the Japanese session. And here you find that Euro was having an initial low of 1.0964, and then subsequently they came down to 1.0953 and gone above. So they just done a brief downward stop and during that of the early part of the European session. And the high was 1.0981. Still they are not breached it. They are simply holding it. So when they are making a narrow range consolidation, they are most likely to do a downward stop and before that of the press conference and then start gaining the level because there is a fundamental event. And in the case of GBP, 1.2277 was the initial low. They just breached and staying below that as 1.2265 level. The high was 1.2298. They are not breached. So Euro and GBP are the prime currencies wherein the volume is relatively high. When they are not breached the low or the high, and especially in the case of Euro, in the case of Euro, they are just breached the low and come up, and the high has not been breached. In the case of GBP again, they just breached the low and high is not been breached, which indicate that they are making a prolonged consolidation for lack of volume from that of the traders. When the traders wait for the ECB outcome and not committing the positions, their players will not have any charm in making a rise or a drop because that does not give them any profit. So they are all profit oriented, and obviously when the profit making opportunity is not seen, they are only making small swings to indicate that the market is alive. Then in the case of yen, 103.34 was the initial low. They are not breached it. 103.67 is the high. They just breached the high and went up to 103.81 and come down to 103.67 level. So a brief upward stop and they are done it. And they are likely to again make one more upward stop and then start making the slide again. In the case of CHF, 98.86 is the low, 98.81 they showed a new low, and 98.99 is the high. They just showed 99.09 as the new high, which indicate that they just made a brief upward and the downward stop in the case of CHF. And in the case of Canadian dollar, 1.3114 is the low, 1.3147 was the high. They just breached and went up to 76, and then now currently trading around 31.51 above that of the initial high. Then in the case of Australian dollar, 76.87 is the low, and they just breached the initial low, came down to 76.54 and still holding below that of 76.87. 76.77 is the current level, and the high is 77.34 that is not being breached. So here you find that they breached the low in the case of Euro, breached the low in the case of GBP, breached the high in the case of USDN, breached the low and the high in the case of CHF, breached the high in the case of Canadian dollar, breached the low in the case of Australian dollar, just indicating that they are doing the USD gaining move. So they are doing the USD gaining move in all. And here you find that GBP Euro is showing 2 pips positive net change, and USDN is showing 23 pips positive net change, indicating that they are doing the contrarian moves. So whenever they are making contrarian moves, that means they are handling the crosses. When the volume is low in the majors and during the mid session, they just make the contrarian move in the case of crosses. Then GBP is showing about 26 pips negative net change. So Euro is showing positive net change. So when ECB is pertaining to that of Euro, they are just holding it, whereas GBP is not directly related, but they are making the dip here. That is to handle Euro GBP cross. So by holding Euro in positive zone and GBP in negative zone, they are able to gain the levels in the case of Euro GBP cross. Then CHF again is showing 3 pips negative net change from that of yesterday's US session close, indicating that they are making subdued moves. Then in the case of Canadian dollar, they just made 40 pips positive net change on the upside. And in the case of Australian dollar, 55 pips negative net change, indicating that they had done good USD gaining move in them before that of the ECB press conference. So initially they are let loose the market and induce the traders to feel that the market is not having strength, so that the traders could think that any bounce back could be a sell opportunity. And when they see that bounce back is not happening, when they started making the slide, immediately the traders might go and sell during that of the dip before that of the ECB press conference. And you know very well, they make the false move before that of the data release or at the time of data release, and then suddenly reverse the market and make the opposite move to create surprise to that of the traders. So market means surprise. So the players continue to give the surprise. So they sometimes make the moves in line with that of the fundamental data expectations. Certain other time they simply say that it is being discounted, and then the market is having the risk appetite or risk aversion, etc., and make the opposite move. So which way they are going to move it, depending upon which way the traders are holding the positions. And when the traders have accumulated enough of buy positions, then they will quickly gain the levels and book profit. So at that time, the traders might develop, based on the influence of the fundamental, they could develop the bullish feel and buy after the rise, but the players will happily sell to them. This is what happens every time. So as far as the players are concerned, they are the bulls, they are the bears. But the market interpretation is always of a different nature. And people used to say that there is a tug between the bulls and the bears. The bears are having a control over the market, or bulls are having the control over the market like that. But actually, there is nothing of that nature. Actually, the same traders or the operators, when they accumulated huge buy positions by creating bearish field, they quickly gain the levels and create the bullish field and act like a bull, but they are selling at a higher level, and similarly act like the bear and they are buying after the drop. So this is what they do it, but they want every trader to say that it is a bull market and the bear market. And so when the traders continue to say that, they are really confused. How come suddenly the bulls lose the grip and the bears take over? How come the bears lose the grip and bulls take over, etc.? And it is a surprise for the traders. But the players have got the story to go on, and they make huge profit out of these misguidance. So here you come across the forecast, then I explain to you the market reading, then I'll come to that of the trade call. Now, so when you look into that of the market currently, Euro GBP, as I told you, they are holding below that of the initial low, indicating that they are making the extended downward move. They initially made the dip and formed the new low, but subsequently they are not breached the new low, indicating that they are making an extended move for 2 hours from that of the European session start. Because when the ECB is by 11:45 and also the press conference by 12:30, they have no other choice than to hold the market. So they are making the initial extended move on the downside, so that the opposite is expected to happen. So it becomes predictable for us. So after the dip, they are expected to make the rise, irrespective of what the ECB president is going to speak. So whatever he says, the people might take some words from his speech and say that he is hawkish. So they simply use the behavioral terms like hawkish and dovish, and which is normally seen in animal behavior textbooks. But these words, they pick it up from those books and give it in the market, so that people think that, okay, hawkish, dovish, they are all two different things. So hawkish is nothing but hawk is a predator. So a predator is expected to be very, very vigorous. That is why it is referred as hawkish. Whereas a dove is a docile or a very polite bird, so which will act in a shy way, and that is why it is called dovish. And this is nothing but the behavioral terminology of the human and other animals. But here what is happening is, in the case of market, when there is an aggressive statement made by any uh, the top leader of the country, then immediately they say hawkish and dovish. And once ECB president gives very strong tone, then they will say hawkish and start gaining the level. And if the market is going to behave like that, then ECB president can continue to talk every day so that the market will be hawkish. But they simply use it to say that when he is hawkish, he is confident of uh, tying over the situation, and he will be able to really make the economy to grow. That is what they interpret and say that he is hawkish. But such mere expressions cannot drive economy, but it can drive the market momentum. So always keep in mind the market momentum or market sentiments are short-lived. So the players create the market sentiment and act against that of the traders when they are committed to positions. So normally they create that sentiment, and when the traders think that okay, it's a buy opportunity even though it is bearish conditions prevailing in the market, then they will try to buy. But before that of the ECB press conference, they will simply make a dip and hit all the stops and then start gaining the level once he says good morning. I don't know what they derive from that word good morning, but simply they start gaining the level in the case of Euro and GBP as soon as he opens his mouth. So it is really kiddish, but still that is how they make it. Now these are all the calls I wanted to propose. You can try it in a demo trading platform and see how exactly the results are to understand how the spike trade calls work. So you can keep a buy near that of the lower whenever they are making a brief downward stop and before that of the ECB press conference. So around 12:30 GMT, before 12:25 to 12:30 GMT, you could make a dip and watch and buy around these level. Take a buy and later on keep the hedge order immediately, and once the position start making profit, you keep stop at entry and remove the hedge order, then trail the stop in a profit making position and keep the limit, and you can move the limit on the upside as well as the trailing stop below that of the market. So as a result, you will be able to maximize the profit. Similarly, in the case of GBP 1.2250, you can keep the buy limit, and 1.2330 you can take the exit limit, and 1.2210 a hedge order to limit the risk. And in the case of Australian dollar 76.50, you can give a buy limit order. And in the case of USDN 103.90, and they have formed 103.81 as the high and come down, and they will make one quick upward move and then start coming down. That will act as a trigger for the market to go up in the case of Euro and GBP. So USDN, they will just make the USD weakening move, then automatically you find that Euro and GBP, people will start buying and it will start gaining the levels. So this is how they are planning to move the market. So with the help of the market reading and studying the what type of moves they are doing it, they have done the extended move. So followed by that will be a false move, a dip closer to that of the low or slightly below that as a stop, and if needed, then they are expected to make the opposite to that of the extended move as an intentional move on the upside. So following the move, the forecast also say that they will make the slide and then gain the levels towards close and start gaining the levels during the US session. And also the market reading says that they are likely to gain the levels. But still, we do not take a blind risk. We keep the hedge order to limit the risk as a trading strategy. And then once it is not hedged, we simply remove the hedge order and keep stop at entry once the position start making profit. So this is how we envisage the plan. So we have all the contingency plan if the market goes against us or goes in our favor. If you have got any doubt, you can ask me the questions. I'll be willing to answer to those questions in the question answer window. You can make a note of the trade call and find out how exactly it happens. Anyhow, I'll come back by 13 GMT by close of the US session, close of the European session. Then I'll review the call. So I do not want to talk more about the fundamental, the ECB interest rate decisions, because see, these type of basic events or the fundamental events are bound to happen every day in some country or the other, and the market is expected to wait for that and then take that as a clue to derive how the economy is expected to be. Yes, economically it is correct and financially it is correct, but unfortunately what happens, the players manipulate the market. That is why you find the fundamentals and the technicals, even though they are expected to drive the market, but the players make the moves appear following technicals and fundamentals and suddenly reverse and say that it is due to technical the market is reversed or due to fundamental the market is reversed. So they give that sort of interpretations. I don't see any question coming forward. If you got any question, kindly ask me. Okay. In this case, I take this opportunity to thank FX Street for the facilities provided to present the webinar. I'll come back by 13 GMT, and I am just keeping the question answer window on the side to see whether anybody is asking the question. If any question comes, then I will answer that. Okay, fine, no question coming forward. So I'll come by 13 GMT and review the results of the calls what I have given and also give the post ECB data release events and the reviews pertaining to that. See you one and all by 13 GMT. Take care.